Hello, everybody. This is Justin Watson here at Just in Time. We're going to continue our series on how to buy a house. 13 steps on to do that. We have done 3. So if you have not already, please go subscribe. That's what I need for you to do. Go like, ding, ding, all that. Get all the preliminaries out the way, like, tag, share, all that stuff, so that you can be informed everything that we're doing just in time. Okay, so today the last 3 topics we have done is the first topic was see if you meet the requirements to buy a home. In that series, we went over step by step what it takes for you to see if you even meet the requirements to buy a home. Secondly, calculate how much money you can spend. Okay, step by step. Okay, and then like I said, if you want deeper, you must pay. If you want me to go deeper. Just saying, because that's kind of like one-on-one. You need intimate, you want numbers, things of that nature. We do that. I need you to pay me a few dollars because now I'm having to computate some stuff. Okay. Thirdly, save for a down payment and closing costs. In that episode, I'm telling you what you can expect, on when you get ready to buy a house, down payment wise. What's realistic, what's not realistic. How long you think or how long it should take for you to reach the goal that you set, depending on what you get on that down payment. But today, guys, we're going to talk about deciding what type of mortgage is right for you. So let's talk about it. Okay, so let's talk about it today. So let's see what's the right one for you. So let's go to choosing the best one. So in this episode or this video, we're going to talk about the multiple mortgages that are available currently when you go to buy a home. Okay. Like I say, if you have any questions, reach out to us here at Just in Time, 888-505-8963. We do have a licensed real estate agent standing by, waiting to assist you for listing your home or purchasing a home, rental, things of that nature, and to answer questions to say, is the timing right for me to do that? Okay. We're here for you guys. We really are. Not only is he there for that, we also are licensed that we can do auto and home for you too. So when you buy that home, we can insure it as well. We're a one-stop shop. And if you have problems with showing proof, we can do your taxes. Okay. So we can do the paperwork necessary for you to get the home. And I'll talk about that in the first video episode. Okay. So there's multiple things that we do here just in time to make sure we take care of the whole person. Okay. Then you can come buy a housewarming gift in our store. Hey, did I say housewarming gift? I did. I had to take those glasses off because my head's spinning. All the pressure. I can't see, but the pressure was on my head. But anyway, let's talk about the first one, fixed rate mortgage. The fixed rate mortgage. This is like the most common, because it's kind of like FHA. It's the interest rate remains constant throughout the whole loan. So if you want a fixed rate, is what I tell people. You don't want no jumbo, just ARM, the one we talk about next. Fixed rate means it's going to stay consistent so you can kind of budget for it. Okay. So the best, those who plan to stay in their home long term and prefer predictable monthly payments. So if you're going to be at your home for 5 years or more, you definitely need a fixed rate mortgage. Just saying. Secondly, the adjustable rate mortgage is called a ARM. Sometimes they call them jumbos. They come 5-year ARM because after 5 years, boom, that payment gonna go up. Sometimes people can't afford it. It's called interest only loans, which is the next one. But adjustable rate mortgage, which means ARM, ARM. Description: this interest rate is fixed for an initial period. Then after that, typically after 5 years, it's going to go up periodically based on market rates. Okay. So that means if the interest rate this month is 6.7%, you're going to pay 6.7%. Next month, if it's 6.9%, you're paying 6.9%. If it's 10%, after 5 years, it just goes with what's going on. Okay. And you got to go with it. Most people sell at that point or refinance. This is people who are going to move, who plan to move, refinance within a few years and want lower initial payments. So when you buy a house and do an ARM, you better be sure you're going to be able to sell it. Because if not, you're going to be stuck like Chuck. Typically, if a house sells on the market over 60 days, you don't want to do an ARM loan on that. I'm just saying. You want a hot house, a house that says on the market less than a month. That's the house you want to do an ARM on. Just saying. That's just my personal opinion. Next one. I've done this one before when I was stupid and younger. Just saying. Interest only loan. I wanted a house so bad. Had 2 mortgages at that time. That was back in 2007 and 8. That was kind of like where we are at today. Money was good. Everything was good. People just didn't know what the heck we was doing. I was young and dumb. Just wasn't doing the right decisions. Did an interest only loan, which means your payment goes only towards the interest. That's crazy. So if your payment's $500 a month and you have a $100,000 loan, guess what? You just gonna be paying $500 a month till Jesus come. Amen. I don't hear the church saying amen. Why is the church quiet today? I need a church talking back to me. Quiet. Okay? So that's the interest only loan. That's basically for borrowers who expect to increase their income or sell the house before the principal payment starts. Okay? FHA loans. This is the most popular one that I hear about. FHA loan is a government-backed loan with lower down payments. Okay, this is a loan that you're gonna get outside of a first-time home buyers. That's gonna give you the best interest rates, typically, or the lowest interest rate, or down payments, should I say, down payments. So this is for first-time home buyers or those with lower credit scores can get an FHA loan. So typically, if you get an FHA loan, you're 3.5% you in. But that's why in the other video, I say do 20%, okay? There's reasons behind the madness. If you just desperately got to have a house, go FHA, pay the 3.5, and then going to be mad because it's like buying a car with upside that you get negative equity in. Just saying. VA. Everybody know what a VA loan is. People didn't realize there's this many loans. VA loan, that's for people who are veterans. Okay, these are backed by the Department of Veterans Affairs. Okay, so these are for veterans, active duty service, National Guards. So people dealing with that armed services, you get VA loans. Typically, you're going to get a good interest rate. Okay, just saying. The terms are favorable and the payments are no down payments typically on VA loans. Okay, that's the one joy of going to the service is you get a VA loan. That's about it. Just saying. Thank you all who served. We appreciate it. I got multiple family members, including my granddad, served in services. And God, for what reason? Just saying. For this. And they don't take care of you. Don't take care of y'all. And gonna give you a VA loan with no down payment. How about you just get a VA loan with no interest and you get a free months off or something better than this. Just saying. But I ain't the president. That's another topic. USDA loans are government-backed loans for rural housing. These are for rural areas within low to moderate income. So USDA is going to be for your usually low-income poverty level homes, government backed homes. You're looking at what they call, I can't think of them. What's those houses? Jesus, if I can't think of them. Habitat for Humanity houses. Those houses usually can get a USDA, typically, okay? Lastly is a jumbo loan, kind of like an arms loan, the loan that exceeds the conforming loan limits set by Fannie Mae and Freddie Mac. This is people who purchase high-value homes. So these big houses, people just want a house. You want to be the Joneses. You want to be like Hunter. Want to have these big old houses on top of the hill. Pay $750,000 and work at McDonald's. And got a jumbo loan. Hey, you got the house, though. So as you can see, it's best for buyers who purchase high-value homes who need to borrow more than the traditional limits. That's a jumbo loan, okay? Things that you need to consider when you are looking for loans, okay? Guys, like I said, I'm trying to break this down for you guys. You need to consider duration. Typically, most people do 30 years, which is a big no-no. Big no-no, but people do it. You got to think 30 years is 360 payments. So if your house payment is $2,000 a month, that's 36 times 2. That's $720,000. Okay. So if your house is 400,000 and you're paying $2,000 a month, you're going to pay $720,000 for that house over 30 years. So that means you're almost paying double on the house. Just saying. Now you can do a 20-year, you can do a 15-year. That's very rare. So if you do a 15-year, that $2,000 payment going to be $3,000 for 15 years. So you do $3,000 for 15 years. That's 180 payments. Okay? So now that $400,000 house that you got $400,000 for, you can pay $3,000 a month for 15. Was that 180 months? So that's 15,000. That's 50. Almost 450,000. Okay, you see the difference in the interest? Okay, just saying. Okay, shorter terms usually have higher payments, but lower interest costs overall. And that's where we mess up, guys. We borrow money way too long, and we pay way too much interest just to say we have it. If you can't pay it, don't get it. My dad used to tell me, if you ain't got the cash, go ahead and pass. Okay, if you ain't got the cash, make a pass. Okay, because if not, this is what happens. You're paying way too much for something that's not worth it. Okay. Down payment, consider how much you can afford to put down up front. Like I said in the third video, part 3, I said you need at least 20%. Okay. Consider that, guys. What we in a hurry for? We're in a hurry to pay two to three times more than the house is worth. That's what we're in a hurry for. Okay. Your monthly budget. If you can't do a monthly budget for 1 year, you don't need to buy a house. You should follow a budget for 1 month. 1 year. I said 1 month. For 1 year before you buy a house. I tell all my people, whether people listen to me or not, I just believe in that. You need to be able to follow your own plan for a year. If you can't, you don't need to be buying nothing that's going to be this detrimental to your finances if you don't pay it. Just saying. Future plans, think about how long you plan to stay in the house, your futuristic goals, things of that nature. Next step, you must assess your financial situation. Review your income, your credit scores, and your savings. Right now, everybody can do that. If you need help with that, give us a call, 888-505-8963. Reach out to us at our email at leads@justintimeservices. Don't forget the time is spelled with a Y.com. Okay? Your credit score. You can go right now to www.creditkarma.com. Go there for you. Because I don't know if Hunter's going to put up, what's the word, when he does his edit, going to put stuff in here. So I'll go ahead and put some stuff in here for you as I speak. So creditkarma.com. Look, I can't spell, y'all. I put Karma Credit. See, creditkarma.com. Go there. Sign up to your account. You can sign up for an account there. You can do your credit, everything in real time. No joke. If you got questions, you can get your username, password, send it to me. Especially if you're a client, that's what we're here for. We're here to help you. Okay. Show you how to save. Research lenders. Got your lenders. I already got your lenders. I can tell you who to work with. They have helped people. But if not, that's what you got to do. Get pre-approved. Not pre-qualified, get pre-approved. Because if you're not pre-approved, ain't nobody gonna pay you no attention, especially in this market. Okay. This gives you a clear picture of what you can afford. It's going to give you a clear picture of what your payment's going to be or what you need to be looking for, okay? So you get pre-approved when you're ready literally to start looking for houses. Not now, because the pre-approval process lasts 90 days, okay, after you do it. So don't call, I want to look at a house in 7 months. Okay, you're looking at the house in 7 months. Call us then. No, if you tell us that now, we're going to be like, okay, we need to see your taxes. We need to go ahead and start the process to see what it's looking like so that when your 7-month time is up, we know where we need to be directing you and things of that nature, okay? So if you have any questions, peoples, friends, things of that nature, give us a call here just in time. where we strive to provide an experience. That's what we do here. We're striving to provide an experience for you to be a better you. Because when you're better, I'm better. Because I need you guys. I tell you all the time, every episode, every time I come, I need you because we need each other. Okay. I need you. We really do. Okay. As we conclude step 4, episode 4, deciding what type of mortgage is right for you. We're going to talk about how to get pre-approved for your mortgage. That's going to be in our next episode, okay? Hope these little series and these little episodes, guys, are helping you navigate answer certain questions. If you have any more questions, you can reach out to us. Like I said, I've given you our contact. It's going to be on our screen. You'll be able to I should be able to click on the link in the videos, things of that nature, to get where you got to get to me or somebody here in our office, okay? And remember, I need you and you need me. Together, we edify just in time where we strive to provide an experience. We'll see you soon.